5, 4, 3. Hello, this is Dave, and welcome to Equity Story. I'm here with the wonderful Wolf, and this is Equity Story Trade Watch, and it is just general share advice only, not personal advice. Now you know that, but we just have to say it every day because
we do. We get in trouble otherwise.
Because you might forget. All right, Wolf. There's, like you said, the Battleship Thursday. They've all coming out with the announcements.
The big boys.
Maybe I'm going to start from the bottom up, right?
Go on, start wherever you want. There's lots of announcements today with the reporting. It's a super Thursday.
All right, IPL is a dividend play. It's not expensive. It's sort of flirting around trend. I mean, I have to put it on a monthly really, but it is a dividend stock. Good announcement. Are you holding this? And if you're not holding it, would you still be buying it for a dividend?
Yes, I would be buying for the dividend. It's still a hold, and I think it was an update just talking about how IPL is going, which is going okay. But then, what you also have to take into account is, all right, they're obviously talking positively, but let's look at the outside factors and some of the costs. Well, some of the big costs that they have to incur, and that is gas, right? That's dropping. That's a big positive for them. So then maybe the costs are going to be better over the next period. And the prices they're still getting for some of the products are still quite high. So I think overall, Dave, I think this is definitely one. If you're interested in dividend story, you'd still be probably accumulating. And I love to accumulate when they're on the lows.
All right. So okay, we've got some good news there. Now NWH, obviously,
Market didn't like that announcement today, and it wasn't brilliant, I have to say. In this space, it's actually been going quite well, but that was probably not enough for the market to really see it go any further than this. Lots of profit taking. In fact, I'd probably be looking at somewhere else, to be honest, on that announcement.
Yeah, I think if you're in it, you'd have to be getting out, Wolf.
Yep.
Look at that daily. If it looked like that by the end of the day.
Exactly.
Mix your charts up, get a feeling it doesn't look good. Now, OCL. Yes. One of our favorite stocks now. It's just been the last 12 months. It's just been a tricky period for them, hasn't it?
It has. And, one of the announcements that they had late last year demonstrated the problem that they had. They're just basically where they're just overall looks like just a bad year for them, right? So they had to change, I think, part of the accounting ways. It just threw the whole reporting and revenues and bottom line out. So we just got to take this as one of those years. Are they back next year? And from what they're saying today, it looks like they're back on the growth path next year. It's still a great business overall. Very high recurring. I think over 80% recurring revenues, Dave. So it's a very quality business, niche, really strong long-term returns on this. So for me, the only thing still maybe you can question is the valuation, but I don't think I'll see this drop down to $10, right? Where I want to have a look at it. So I think maybe over the next 3 months, you'll probably be looking at starting to get interested in this and maybe a little nibble here and there. As long as I think, maybe give yourself that, where would you have your stop on this? But I'm liking this from a fundamental point of view, long-term now. But I'm not in a rush. I'm probably just going to take my time to pick my moments to buy this.
Yeah. And the market is funny with these stocks because the markets look at future earnings and where the stocks are going to be in the future.
Yep.
So possibly, Wolf, this could move before
correct
the story really starts getting better, right?
Yeah. Dave, the beauty about this story, it's actually profitable. So it's not one of those tech stocks that it needs another 2 years before they get to cash flow positive. It's actually profitable company. So it won't take much for it to start moving up over that $15 again. So yeah, absolutely, I agree. It could do much quicker than we expect, but I still think we've got a little bit of time on our hands to start nibbling.
Well, I mean, short term, you're waiting. You're not buying it now. If you're more aggressive, if you put it on the sort of monthly chart, it's nibble territory, isn't it?
Yeah, it certainly is
for those long-term guys. So, But thank you very much for that, Wolf. That's a really good, obviously, view of everything. Now I'm looking at Sonic Health, which has been, in all fairness, Wolf, it's been a complete dog since Jan 22, hasn't it? And I accept it's had a lovely little bounce there, 9%, but technically, medium term, you still wouldn't be buying it.
Not technically, absolutely. I agree with you, Dave. This is tale of two halves, so to speak. So we had the pandemic half, which boosted its revenues and profits exponentially, right, by some crazy numbers. And then post-pandemic, from January, everything fell in the heap. And today, I think, is that statement today that we're past that now, right? So basically, the profit lines and everything dropped by 50%, right? Because obviously they don't have the COVID testing anymore and all those other things that are associated with the pandemic on their books anymore, because that business is back to normality again. However, they now refer to themselves, okay, let's look at past that and look at how we're doing compared to before the pandemic started. So that was just in 2020, right? Or just before that, when the pandemic started. And they actually grew their EPS, earnings per share, by 50% since that time without COVID. This is excellent. That's why it's jumping today, right? On the back of that. So I suppose when you look at the company as a whole moving forward from now on, they're probably going to be on a slow grind back up again. That's how I see it. So, probably over the next 6 to 12 months, we'll see that over 32, over 33 maybe. And heading towards back to 35. But would I, from an investor looking for strong growth, you're probably not going to find it here. For an investor that's looking maybe for a bigger company, safer company with a little bit of dividends, then yes, I can make a case for Sonic.
And what is the dividend, Wolf?
About 4%. So it's like, it's either near here or there.
That's what I'm saying. So it's an avoid, isn't it? Now AMP hit the trend line, starting to recover, and bang, down it goes.
Yeah, I think it's one of those I told you so. Do not get in too early on AMP, and I think today has just been an absolute vindication of that. While the main announcement was very positive, we're making profits and so on. You got to go past that, and you go to yourself, we need to see way more than this. And it was, there was one-offs. Remember, they've sold businesses, so it's going to look much better than it actually is. But the actual business is still not going great, Dave. So for me, pass, get out.
Yeah, right. Well, I don't think we've got anyone in that anyway.
I hope not. So if you do, confession time, ATA, please.
S32. It's above trend, Wolf. It's not looking too bad. Good enough to hold it.
Yeah, it is. Look, there was a lot of one-offs in there. So the actual revenues were roughly steady, but the profits fell down significantly, about 30 or 40%. But that was due to one-offs, right? The write-downs, sale of businesses, which obviously were added last time to it. So it looked very messy, but overall still very good. So take out the one-offs, and you still got a very good business there.
All right, we'll go through them a little bit quicker because we've got a lot to go through. GNC, good recovery today, but technically
basically better than expected. Look, again, it was all about wheat prices. So from GNC's point of view, the actual, I think, EBITDA is going to be half what it was when the wheat prices were incredibly high, but obviously better than most analysts were expected. That's what there's a bit of a bounce.
Whitehaven again, Wolf. You'd be a bit nervous. You're seeing coal.
Dave, if you looked at that actual announcement, you'd be extremely nervous. And the reason why, while on a piece of paper, incredible result, right? Double, triple their bloody, profits, whatever. But it's that other little bit that you had to read through, and that was looking at where the coal prices might be in the next 6 to 12 months. And they used one of the consultants out there, and they're going to look much lower. So I'd say there could be a big fall in revenues and profits over the next 12 months.
Well, they are already. I'm looking here. They're down 14% this week.
Right?
I mean,
yeah. So I think the devil's in the detail in that WHC. I'd be getting out.
Right, good advice there, Wolf.
Mm.
DTL, trending
Good
up
result.
absolutely beautifully. Good result. It's definitely a hold.
Yep.
Yeah.
Yep.
Um,
100%.
so would you buy it?
I
Because
think it's a bit too expensive. I think fundamentally, Dave, if I'm a fundamentalist looking at valuation as one of my key components, no. I'd rather buy the trend lines, right? When I say trend, they're cheaper, right? So I'll use that terminology. So I love it, but I need it cheaper. I just can't justify myself to pay that kind of money for this company.
Yeah, and
I like it though. I like it.
You know, you can actually see when it had that sort of breakout, we were sort of, do we buy it? Do we buy it? And it didn't feel strong enough. And look at the price action. It's labored, isn't it?
Yeah, it
But
is.
if you've got the long-term view and you're still in it, it's
yeah, absolutely. If you've got that 5 to 10 year outlook, by all means, have a nibble.
Yeah. Okay. Evolution. You're seeing, gold come down.
It's all about the gold price, Dave. I didn't see anything wrong with the announcement today, result-wise, but it's all about the actual gold price, and I think that's what's showing here.
We're going to have a big time to buy gold, Wolf, in the next 2 months. It's not now. Let this correction happen.
Okay.
And we'll get ready to bounce.
All right.
So, okay. Hats off to this company, right? It's never broken trend. If you follow, and people have been in it, we had a few questions this week. Was it last week on Ask the Analyst?
Yep.
Hold in. It has a broken trend. The price action, absolutely superb, right? Up 11%. And I think I'd wait to see how this looks by the end of the week, Wolf, because there is a bit of resistance around that 520. But you know what? It's maybe one of the best looking charts that we've seen today.
Yes, it is. And you know what? The results probably justify it. However, trading on 16 times, growth 10 to 20%, probably fully valued for me. I mean, look, it might grind higher to maybe to that 250 over the next 6 to 12 months. But yeah, look, I'm going to leave it for you for a trade. I'm pretty happy to give it the ticks of approval fundamentally wise. So I'm going to leave it to you if you think there's a trade in this.
Well, you know what? If you look at the chart before when it was trading at 130, right? It worked its way up, didn't it, to sort of 150 and made about 6 or 7%. But just understand that took 6 months to do that.
That's exactly right. That's what I'm seeing. That's what I'm going to probably see here as well.
So it's I mean, which in the normal world, there's nothing wrong with 6% over 6 months, right?
No.
But so maybe this is a question. If you look at the character of the stock, it might do something similar, and you might see it just trade like that. And I would argue maybe, Wolf, this is just one of those stocks that on a rough day and it comes near trend, there's your opportunity.
Yeah, I think I agree with that.
ORA.
Yeah.
Again, been in a downturn. This is a good price action day. Is this a comeback?
Well, look, nothing's changed for the company really. It's just been the markets that's pushed it down. And there was a lot of nervous Nellies in this stock. That's why it's below the trend, and it's been going down probably for the last 6 months. But the actual company itself, Dave, hasn't put anything negative to the market at all during that time. And today they reiterated how good they're going. And, for a company that's really under pressure from a lot of different places, such as inflation, they really surprised pretty well. So big jump today, and congratulations to them, because normally I tell you, Dave, is that management is worth its weight in gold, and these guys have deserved every penny that they get, because in a tough market, really a business that should be struggling is going very, very well. So I think maybe that the market's got this wrong, right? I think this should be better than it is right now, and it should be probably trading closer to that 350. Saying that, is it for everyone? No, it isn't, because it's, again, slow moving stock. Growth of about 10% at best, right? So it's not a brilliant 4-5%, I think, dividend yield. So again, one of those Sonic healthcare type stories where you could put in your portfolio if you've got that big, looking at some bigger stories to be safer, and you can maybe see a grind back towards that 350 plus over the next 6 months. Definitely good. Look, it put me at ease. Seeing those results, I'm thinking, okay, well, if I'm going to be accumulating something, this probably is going to be one of them.
So,
but it's not for me.
So we know it's slow, it's up and down. Would you buy this as a dividend at 5%?
I've got it as a dividend
Right.
portfolio. Yes.
So you're sticking with that.
Yeah, I am sticking. I'm not changing it. As a dividend play, I'm not changing my view whatsoever. It's still good. But I was really nervous. I was really nervous today, seeing what the result's going to be. Whew, thank goodness.
All right. NCM, obviously, we're taking profits there. Just going down with the gold price, Wolf, I presume.
Yeah, absolutely. And hang on, Dave. Not only they rejected the offer, so we got to take that into account. And that's why we said take profits, because you just never know with these takeover offers. So they said no to Newmont. That's why you still got to get out of this.
SUL. Again, Wolf, it's been had a fantastic move up, and what you'd say you don't, your stop would just be under 12, and it's held 12. Can it go on with it with that announcement?
Yeah, I think it can, Dave. You know why? Is because it's probably one of the few retailers that I've seen that actually have started quite well this year. You know, some of the other numbers we saw were actually like-for-like sales were down, but this guy's actually up. So it's one of the few businesses that I've seen, retailers, that it hasn't fallen off a cliff.
And again, yes, they're paying a whopping 9%.
Yeah, div. Exactly. So this is another great dividend story. I might have to add this to the dividend portfolio.
All right, great. SRG, Wolfie. Obviously trending beautifully in a trading hold. What's
they're acquiring a business from ALQ, another listed company, for about $80 million, I believe. So the actual results were very good. They actually had a little upgrade there as well, Dave, SRG. So for me, looking all right.
Do you know what the raise they're going to raise that?
No, I have no idea. I've just gone into trading hold. They're obviously looking to get some money, but no details as yet.
Okay. So it's definitely a hold if you're in it. A lot of good stuff happening. AUB, up she goes again, Wolf. And, you know, there is a lot of resistance. We did say the other day, I mean, it might edge up higher, but it's got a lot of resistance at that 26.
Yeah, it does. But you know what, Dave, isn't what I normally say? You buy upgrades, right? A beautiful upgrade here from AUB, about 20%. Oh, sorry, not about 20, about 10%. You got to like it. You know, you got a business that's going very, very well. It's in a really sweet spot at the moment. Can it go higher? I think it can, because I think it's still very positive and conducive for them to grow. You remember these guys are buy other businesses and grow through that, not just organically, but through acquisitions. So look, this is long term. They put this on put this please on a 5 to 10 year chart for me, and you see why you'd be sort of called. You probably don't want to sell a single share. That's why. It's good. It is good business.
I mean, you've looked at that on the monthly, you'd be buying that, right? If it looked like that.
Right. That's exactly right. They delivered a very good update today. Very good update. So for me, I'm a accumulator. You know, I don't think it will come back to that 21 for us to buy again. So you've got to make a decision where you're going to buy it. Would you wait for a bit of a pullback, or would you just buy it today with a long-term view?
I think, Wolf, you know, it's had a bit of an exhaustion pattern. There is resistance there.
All right.
I think if it dips back down to 24, maybe, and then starts to turn, there's your buy, right?
All right. I'm loving. That's good.
I just think the market's tricky at the moment. That's all.
Yeah, no, I agree with you. You know, you probably don't want. You just want to give yourself a little bit of room, right? So
you know, if we'd had the announcement there, we'd had that move, right? Then it would have been a bit more juicy, right?
Wish. You wish.
Right. Okay. But I'll tell you what. But definitely, if you're in it, you're not selling. Okay.
No, certainly not. We don't sell upgrades. No.
No, definitely not. No. Definitely not. CDA is trying to get back through trend.
So two things in there. Announcement. One, a little acquisition they made. Another one, the report. And look, they pre-released the numbers anyway, so there's nothing scary in there. However, you know, the numbers were down, which they flagged. Is it back yet? No, I don't think so, Dave. I think we've got to give it another at least 6 months, at least.
All right. Goodman Group.
Yes. Now, Goodman Group, I'm just gonna gone around here. Again, I think the market got this wrong because this is a great business. It hasn't put a foot wrong, hasn't said anything negative whatsoever. In fact, today upgrade, Dave. This is a 20% upgrade from them. So going from 11% to about 13% growth. You got to really like it. A big company, what, 30 billion or 40 billion company now, but they're talking about the actual business and the outlook, and it's still incredibly strong. They've just signed, they've just started to build the biggest warehouse for Metcash in Australia. Massive, the biggest thing ever. And they've got so many of these on the books to still build. It's just, there's no way I'd be selling this. I'm holding.
Okay, and we are actually trading at the moment. So if you're still in it, just hold it. It's giving you no reason to get out.
No.
Lastly but not least, we got two more. NAB. How are the banks doing in this environment?
Dave, I think yesterday that CBA was a way overreaction. I mean, crazy, right? Banks are just banks, Dave. They're probably just going to be good dividend payers. That's pretty much it.
Right. Okay. So you're not just
solid... not super excited about them. But if you're building a dividend portfolio, you're probably going to have a bank in there somewhere.
All right. And
this is my favorite of today.
Okay.
Telstra, Dave. Yes. Look at that. Look at that chart. Not bad, is it?
Right.
Let's hope it can go on with it. The results all the way around, from the top, revenues to the bottom line, and PAT to the EPS to the dividend, everything was up, Dave. You're going to like it. And the outlook was positive. Even though we're talking single digits, I don't care. It's actually positive for a big company like Telstra.
Okay, so the dividend about 4%, and what you feel we might get some growth out of this, so if you take that year view.
Correct.
So again, a dividend stock, a div with growth.
Yep.
There's a few dividend ideas today, Wolf. I'm looking at this. You've got
SUL. Some of these not incredible dividend payers, like Telstra 4%. What was it? RIA about 4-5%. Sonic about 5%. So if you're looking for the dividend buys, also IPL is another one which is about 8%. So if you're looking for there's some really good ones, like you said, Dave.
Well, I mean, if you look at IPL, you've got 8%. You've got a SUL, you've got 9%.
Yeah.
You've got some of the others like 3-4%. If you take up a whole group of those, you're getting around a 6-7% solid.
Exactly, and you're getting some really good companies with a bit of growth, Dave. That's the beauty about it, right? So yes, I agree.
So really, that's what we've got to look at today from these announcements. Like it's ticking the box for a few dividend plays.
Yep, it is. It is. So for the income hunters out there, very good set of results for a lot of these companies for you.
Okay, that's the message today, isn't it? On that note, Wolfie, absolutely brilliant. Thanks, champion. Have a wonderful day.
Thank you, guys.
See you, Wolfie.
All right. Bye.